Welcome to some updates for the new week, right? For this week, so I just want to share with you guys some major updates. We're just gonna have a quick look at the S&P 500, the SPX. As you guys can see, this year has been absolutely insane, and we are streaking to all-time highs. Last week we tested new highs. This week we have experienced some volatility, some drops, and again, this is with regards to further tensions and uncertainty that's basically been being caused as a result of whatever's happening um, in the Middle East, right? As we can see, you all can see this headline, right? A dangerous time could be actually formed. And what is the reason for this possible dangerous time? I foresee that the reason for the dangerous time is very simply because right now, um, you know, essentially there could be a possible fear that Israel could be targeting Iran's oil industry, right? So again, if oil prices happen to really spike and oil happens to spike like crazy, this could result in massive inflation, which could really hamper the plans of the Federal Reserve to actually drop rates, right? Like inflation is actually very, very, very dependent on what oil actually does, right? So let's just have a look real quick at what oil is doing, right? So if I actually did a quick glance and if you look at oil currently right now, as you guys can see, this past week we saw oil prices really taking a huge spike up, right? Like in the last 1 week we went from a price of $67 per barrel, and we hit highs of nearly about $78 per barrel, right? So a huge sudden spike in oil because of the tensions that arise in the markets, double bottom being formed, right? And again, if you're looking at a little bit of a longer range, we can see a little bit of a very strong channel basically being formed here. And unfortunately, if we do break out above $85, and we do break out to the highs, I foresee scary times, right? So as you guys can see, in 2022, during this entire Russian debacle, right, oil prices spiked up to 120 bucks, which led to massive inflation numbers, right? So again, we don't want to actually see this breaking above this $85 zone, which can be quite dangerous, right? So again, oil prices suddenly did spike, which is causing fears with regards to inflation numbers, right? And of course, this week is CPI week. We're announcing inflation numbers. Of course, they will most likely be reflected next month. But this is something that is a cause for concern, and hopefully we rally back down, right? Like, but again, if oil prices really spike, if we do get a hit on Iran's oil spots, then very simply that's something to actually fear, right? But other than that, again, I still expect bullish momentum going into the elections that's happening November 5th, right? The next very, very big news that basically happened was very simply in China, right? So in China, this past month on October 1st, massive stimulus measures was very simply announced, huge stimulus measures, and this is absolutely insane. And again, this involves three main parts. The first one being interest rates reduction, right? So again, essentially the the interest rates was basically reduced by 0.2 percentage points, right? And reserve requirement ratios by half a percentage point as well. Number two, the Chinese Reserve essentially cut mortgage rates for existing home loans by roughly half a percentage points, right? Which is absolutely insane. All right, and reduce the nationwide minimum down payment requirement from second home from 25% to 15%. That's absolutely insane, just to stimulate the economy as well. Obviously, China is not doing very well, and the government is actually going to crazy means to try stimulate the markets, right? And again, the third move that they're making is an absolute crazy thing, right? And again, what they're doing is very simply this. Let me just go through this. So again, institutional investors will be able to borrow liquid assets such as bonds and bank bills directly from the central bank using assets like stock exchange, using ETFs as collateral, and then sell them to get the cash they need to invest more in the equity markets, right? So they're able to borrow treasury bonds and bank bills with their current ETFs and then sell them to get cash to invest more in equity markets. Absolutely insane, right? Like again, this is what is being introduced so that there is even more stimulus in the markets. And what happened as a result? Let me just show you, right? And again, one of the things that we reference is very simply Hang Seng. And this is basically what happened. In the last 1 week, we saw absolute madness. I think this basically again was from September, and again in a matter of like 1 week, we saw a 30, close to a 40% increase in the markets. Absolutely insane, guys, right? Like we've seen volatility that you've never seen. If I zoom out over the last 2021 all the way through 2024, we've seen pretty much a large downtrend, right? Like a massive downtrend all the way through. And the Chinese government is just doing whatever it can to basically stimulate the economy, right? Like it's just been a 3-year downtrend, if you guys can see, right? Like 2021 was down, 2022 ended down, 2023 has been down, 2024 wasn't looking good as well, right? So they're doing absolute madness to basically stimulate the economy, and that's basically what has happened, right? Oh man, if you guys can see, if you guys are traders, the volatility in here is just absolute nuts, right? Talking about a 1 day drop of 2,000 points, guys. This is absolute nuts. It's insane, right? The volatility currently right now in Hang Seng is unseen, right? Like it's if you're a trader who likes volatility, then Hang Seng is where it's at currently right now. It's moving like absolutely, it's absolute nuts, right? It's a little bit scary, but that's what it is, right? And but yes, the taps have been open for people to reinvest, for people to release cash, and all this money is going to flow, right? So China being the second largest economy in the world, money is being open so that again, money can flow in the economy. Because in the US as well, we have interest rates being cut as well. More money actually flowing, people actually receiving more money. Why? Because we have interest rate cuts, we have the presidential elections. So again, very very bullish on risk assets. A lot of money is actually flowing, a lot of free cash, right? So something to actually look out for, to pay attention to, right? And of course, this week we also have it's the CPI week, guys. On October 10th, we have CPI week happening 8:30 p.m. On Thursday, we have our core CPI that's happening. Of course, we have FOMC meeting minutes as well. And of course, PPI that's happening on October 11th. Something to watch out for, key inflation numbers that can lead to volatility in the markets. And again, if you do see a drop in inflation data again, this might be a further bullish case for interest rate cuts, which will happen November 7th, right? So something to watch out for. Anyways, these are the major economic news for this week. I hope you guys found this video useful. Take care, guys.